Hey guys, welcome back. Welcome to Sami Trading Hub. Okay, so I hope you are having a good week so far. It's been quite some time. I updated the channel. So today we're going to be talking on something very complicated and more of context. It's going to be very difficult to understand it watching this video just once. Trust me, you need to put in your work and efforts and invest in your time in studying these things if you really want to follow this channel's teachings. I wouldn't like a situation whereby you go ahead and trade with your life funds and you come blaming this channel for mis-teachings or misinterpretations of price action. Okay, so today we want to be looking at inducement and liquidities, but not in market structure, not in higher highs and higher lows or lower highs and lower lows as you all understand. That one is, I think, it's very common and it's popular, but this one is different. This is kind of the ICT inducement and liquidities. It's very important. Is one of the key things to trading lower time frame. Yeah, trust me, if you understand the way the market works, the market is engineered to do three things. I said this in the previous video. If you've not watched the previous video, do well to do so. Is it the previous video or 2 videos back? The market is engineered to do three things: run for liquidities, leave imbalances, and refill imbalances. Those three things. So anywhere price is heading to is either touching one of those three things, taking out liquidities, or it is refilling an imbalance, or is leaving an imbalance. One of those three things. That's if you understand those three things, you can trade any time frame. Trust me, it's any time frame. Lower time frames are not noise, you just don't know how to use it. It's more complicated. Okay, and one of the mistakes you guys do is trading lower time frames with your phone. That is very, very wrong. To trade lower time frames with your phone, because you're not going to be seeing the whole picture of everything. Okay, so let's talk about this week so far and the choppy price action we've been having recently. Everything is not really flying as it was last month, but we have things really ranging and consolidating. You can check from the daily chart on Nasdaq or NAS 100 or US 100, however I want to call it. We tapped into this rejection block or weak zone, however I want to call it. I still call it rejection block. I call it weak zone. It tapped into there and shows slight rejection. This is based on bias. I want to walk you through. This is based on bias. So we have an imbalance here, and remember what I said, price does three things. So refilling that imbalance is part of it. We have an imbalance here for price to likely run into. Yes, I don't know how long it will take. It might not be this week, it might be next week, but we have that imbalance there for price to run into. And for correlations, we need to consider the dollar index. So the dollar index, what is it doing? If the dollar index is rallying, um dollar quote pairs will be dropping, just like NAS 100. So if DXY is rallying upside, US 100 will be doing what? Will be dropping. As you can see here, this is a rally on DXY and this is a drop on US 100. So DXY also tapped into a weak zone or rejection block, however I want to call it, and dropped into this FVG to continue its rally. This is a possible sell side liquidity, this is possible buy side liquidity, and we have a potential FVG upside here for it to fill. Forget this other blue line, that's for weekly array. So we have this potential imbalance for price to fill, which I'm looking up to that. But what is it? This is the long-term bias. Short-term bias is based on this aspect. You want to pay attention to this. What is price likely to do here? Price likely to take out this imbalance, then rally, right? They continue the rally, and as it's taking out that imbalance, NAS 100 another good pair should be rallying because it's dropping. So when it starts rallying, its quote pairs should start doing what? Start dropping. So if you understand these correlations on how to use the DXY to pair and trade BTC, NAS 100, EUG, and all of that, I'm not going to be teaching about that in this particular video. But you can see we have relative equal lows here, and we have a potential FVG there, of which I marked earlier day before yesterday, and price punched through that. You can see it right there. Let me, sorry. Okay, so let me reduce the size of that column FVG. You can see it very well. All right, I had this 15 minutes FVG here for price to punch into, taking out this relative equilibrium, but that's the base, our main topic today. We're talking about how these lows work. Okay, so price dropped 1, 2, dropped again 3, making it relatively equal, then drop again, taking this one out, making this equal, and took it out, dropped it to the FVG. The next thing that comes to your mind should be that price is ready to rally. Now, how do we correlate that with bear in 100? Okay, let's look at Monday's trading first. Let's look at Monday's trading. Okay, so Monday, like I taught you how to calibrate your chart, we opened at this particular point where price started rallying during the London session. Now, the London is always from 2 to 6 a.m. for the New York. So if your trading view is calibrated on New York session, from that 2 to 6 is your London session. So we had price consolidating towards that during that London session. Price was consolidating. Why? This is accumulation for a big move. All right. Okay, so price consolidated, dropped these multiple lows, 1, 2, 3, 4. This is a call to action. It's telling me that that's an inducement or liquidity, however I want to call it. Liquidity, inducement, they are all the same thing. But you should understand, this is not support and resistance, please. Support and resistance idea is different from sell side and buy side liquidity idea. Because on support and resistance, you are waiting for either a breakout and retest for price to continue, or you are waiting for a rejection at a support. But that is not my own ideology of how I see every single highs and every single lows, or what you might call potential support and resistance. Because here on the 5 minutes might be a potential, support, because it has, if you draw it to the left, you see multiple key levels. But I'm not looking at it to break out and retest and keep going, or I'm not looking at it to reject at some point and keep going. No, that's an old ideology of price action. I want it to take it out before I can see a move, because that is a fill to the market. I want to see price take that low out before I see it goes the opposite direction. I'm not seeing it take that low out, then retest and start going to the opposite direction, and then I'll start continuing the downwards movement. No, that's not how I see the chart. And you don't just take this straight. There's how you combine all of this with the previous day, with the London price action, with the New York price action AM and the New York price action PM. Trust me, it's very complicated, but I'm not here to box your head with a lot of knowledge. If you put in the work, understand, write down notes, try to understand these things, trust me, you'll get it. It's hard, but it's worth it. Okay, now let's look at Monday. As I said, Monday we opened at this price action, rallied, consolidated or accumulated, and rallied again. As we rallied, we are tapping into somewhere. Always know that if you draw out this FVG to the right, you can see how we perfectly priced into that. So it's always rebalancing, taking out liquidities, and just doing something. It's just doing something. The price dropped into that FVG, came back, and how do we time our trades? This is what you want to understand. This is what you want to know. At the beginning of the channel, I told you to always look at the 8:30, the New York opening. Yes, but now I'm telling you to always pay attention to the 9:30, because that's when the move starts. So 8:30 is official New York open, yes, but 9:30 is when the move starts, the big move, the fake move, or whatever you want to call it, whatever you can give it the name of your choice. So price rallies, I called this out in the community, in the Telegram community, where I said I'm looking at those relative equal lows. Okay, so this is the Telegram channel where I made this call exactly at that 9:30 open. Price was supposed to rally up that bulls. I wanted to see that bulls to that rally to that FVG, punching to that FVG before we target those relative equal lows. You can see where I marked them out. You can see where I marked it out. Relative equal lows. Okay, so this was the image of which I dropped on the Telegram channel. Only few people are following the Telegram channel, and I'm happy at least few people are following. So this was that relative equal lows. This is the 1 minute time frame dropped on that London session. So I wanted a fake move to be upside, then punch down to take that relative equal lows. But at immediately at 9:30 started this consolidation, which it was not what I was expecting at the moment. I said this is not what I expected. Still on that fake move, looking at DXY bearish momentum, and I immediately that bulls. I told them I trust you. You're seeing the bulls. Mostly it's elevation down, staircase up, and all of that. So I was now pointing out at relative equal lows potential targets. You can see that relative equal lows potential targets, and the next day price took out the relative equal lows as the potential targets. Okay, so what my point is that you should train yourself to respect every single high and every single low in the market, because there are inducements, there are liquidities. You might want to mark a certain zone as your supply. Yeah, I don't really trade the supply and demand theory, because supply and demand is consists of a high that did what, break structure and has an imbalance. But that high that breaks structure and has an imbalance, to me, is a buy side liquidity or a sell side liquidity for price to take out. Get my point? I hope you understand it, because I don't mostly deal with supply and demand. But if you want to trade supply and demand is just higher time frame. You respect more on the higher time frame. But what I'm seeing on the lower time frame is just any high, any low, acting as buy side liquidity. That's the key thing to trading lower time frames. Okay, so now what happened in the 9:30? You're expecting price to take out sell side liquidity, right? Okay, so price punched above towards that FVG. Let's go to the 1 minute time frame. Okay, so this is the 1 minute time frame of that particular 9:30 fake move. This was the fake move. I identified this. This was going to be the fake move to that FVG, and potential target was the relative equal lows. Price don't ignore that. Most times it does, but might likely take that out the next day. But the rest of its direction is towards those relative equal lows or towards those any relative equal highs. So if you have not watched the simple entry module, please, you can go back and watch the simple entry module, so you know the entry module I use mostly in my trade. That's, in fact, it's kind of the only entry module I use for now. But I have other entry module I don't really use because they don't work every time. This works 90% of the time for reversal or anything. Okay, so price punched into that FVG and break this low. You can see that very clear. It broke this low, telling you that the bearish momentum is thereby showing strength. Tapping into this FVG, you can see the FVG there, the imbalance. Let me give that a different color. Okay, that's the blue imbalance there. You can see it tapping into that imbalance, telling you that price is likely to start going down. So whatever you're doing here, you shouldn't be buying. You shouldn't be buying. I want to see that bulls, or I thought this bulls will rally higher than that, probably taking out a high, probably taking out this high, this relative equal high. You can see that. Let me outline that. These relative equal highs, that's still a buy side liquidity. So I was thinking the bulls would take out that before rejecting, but when my attention was drawn to this FVG, that's okay, fine. Price is likely to reject there, and The only thing I was waiting for was confirmation. That's the only thing. Confirmation. You don't take trades without confirmation. You must confirm your trades first. Confirmation is very important. So the confirmation was my entry module, or the OTE, optimum trade entry, or simple entry module, whatever you want to call it. And you will be selling here, selling short here. Target is what? That relative equal lows. Sell side liquidity as a target. So you can see price sold short from here, sold short from there to the sell side liquidity, 122 pips just on 5-minute time frame. So price took that out, it dropped this buy side liquidity, and that was all for the day. For the PM, there are other things I'll be talking about, but I don't want everything to be too too much for you, so I'm going to take it slowly. That's why we have the community, that's why I have the channel, for you to always ask questions, because just see the PM as continuation. The PM is not a fresh start. For the New York session, the PM, write this down on your notes, the PM is not a fresh start. In case you watch the how to trade PM session video and you're getting the wrong impression about it, the PM is always the continuation of what the AM was doing. That's the afternoon price action in the New York session is always the continuation of what the morning price action was doing. So if you have a potential target from that 9:30, you want to see a fake move that's going to fuel the actual price, that's going to fuel the actual move. You get that? You want to see a fake move to the upside, that means that's a fake move. It's going to get stops, buy stops, because if you watch this, if you look at this very well, it took out what? A high. It must always take out a high. It must always take out a high. So it took out stops to come back for this outside liquidity. So what it's supposed to be doing is that when after the lunch time and it's already PM, what you are looking at, what is price doing? That's supposed to be your idea, because in the AM, after the fake move, that from that 9:30 to lunchtime, you should ask yourself, have price taken out any low or any high, any liquidity? If yes, price is likely to retrace in the PM, potentially to take another buy side liquidity, to take another stops before continuation, if there is. But if price in the AM have not taken, sorry, this might sound very complicated, but you can pause the video or you can repeat the words I'm saying. You can like listen to it over and over again. If price doesn't take out any liquidity in the AM session, the PM will be continuation. It will continue it will continue in the movement to taking out that sell side liquidity. Now let's look at what I'm saying. Okay, let me not talk about that. Let's say that was going to be for another video. All right, that's PM continuation and PM reversals. That's going to be for another video. But what is mostly important here is that we took out this sell side liquidity, thereby creating buy side liquidity. So after taking out sell side liquidity, what's the idea? Price runs for what? The opposite direction. So this was the next day, price action of Tuesday. Exactly, Tuesday. Now I'm going to find my 9:30. So that is my 9. I don't know if you are seeing this horizontal line, but that is my 9:30. I'm sorry, this vertical line, my bad. So what is this again? Equal highs. What do you think equal highs are? Not resistance. They are liquidities. Price will surely take it out. That's how the chart works. That's how it is engineered and coded to work. Now, as you're looking for buy side liquidities, because once price takes that out, you are likely to be shorting for price to take out something else out. So as you're looking for buy side liquidity, you should be looking for what? For sell side liquidities. Like I told you, price always prioritize equal highs to single highs. All of these lows are what? Are liquidities. But we have equal lows here. You can see that perfect equal lows here. So if you are expecting price to take out these equal highs and you want to start shorting, where are you putting your target? First, you can take partials at this low, you can take partials at this low, you can take partials at this low, you can also take partials at this low, but relative equal lows is what price prioritize. Please understand that. Okay, so this was the 9:30 of this was the 9:30, yes, 9:30 of Tuesday, and our target was what? Buy side liquidity. That's just the bias you need. The bias, though, the overall bias, daily bias, is price returning to that FVG. So you should be looking for buys, but not just any kind of buy. You want to understand what's happening, what is happening around the lower time frames within that day, so you know how to position yourself. Like Monday, everybody was looking for buys, but because of this relative equal lows dropped here, price must take that out before continuing. Price don't want to leave anything like that. It happens on different market conditions, though. You should understand that where price is in a very high volatility and it drops this, and it might come back to take that out the next 3 days or 2 days or so. So price opened at 9:30. Now what happened to that 9:30? Because we are looking for buys, right? What happened to 9:30? Let's see. Where did the fake move occur? Is it to the upside or is it to the downside? You know, where I talked about fake moves, 8:30 New York, you must take out liquidity, and that's how you know. Okay, so here we are, 9:30. So buy side liquidity was our potential target, right? Relative equal our potential target. Now price opened at that 9:30, dropped this little low, of which price took out. You can see that price took out that low. It must always take out something. That's not the only low price took out. If you draw to the left, you can see that price took out this low too. So price must always take out a low before, for that 9:30 fake move. There must be a fake move taking out a low, probably punching into an FVG or into an imbalance, but it doesn't happen all the time for price to punch into an imbalance. But what is certain is that price must take out a low to fail the actual price to run for buy side liquidity. So the price took out that low, and we have the simple entry model or the OTE. These are FVG here. And what did I say when there is weak zones? Don't forget our weak zones. I hope most of you have not forgotten these weak zones. It's also called rejection block. So you must have taken entries here. Your stops will be here. I talked about this in some videos back. Your stops will be below here. But weak zones is always, doesn't work every time, but price always come for these weak zones, these rejection blocks. Very important, especially when you have a strong bias, because most people will be thinking that price is ready to change trend and momentum and all of that. But I was looking at this weak zone. I know that price will still rally to take out that equal highs. It's always a priority. So in cases like this, I always have two entries. Always two entries. Yes, I'll take one entry here should price not come back for this weak zone, because the weak zones doesn't happen every time. So I'll take one entry here should price not come back for this weak zone. Normally my stops will be below the original low. My stops will be below here, but it will be small lot size because the risk is high. And I'll take another entry here, which will be high lot size after I've done my risk management, calculate all my pips and everything in the cashback forex. So that's it, two entries to take out what? Relative equal highs. You can see the entry module. This is a confirmation. You don't just go and set limit order, you wait for that confirmation. So once price came back, taking out that buy side liquidity, what is next? It has taken out equal highs. So what is next? After price takes out equal highs, what should come to your head? Price is ready to reverse. Reversing to where? Another relative equal highs. After price takes that out too, what is price likely to do? To rally. Rallying to where? You see what that is? My point. Rallying to where? Liquidity. This will be a liquidity, but we have potential target upside here. We have relative equal highs upside here, which price mostly prioritize. So what you should be looking at is, as price is leaving this sell side liquidity? Is price dropping any relative equal highs or any relative equal lows or equal lows? Because if price is doing so, price will likely come back for it. You get my point? But if price is rallying and it's not dropping equal lows or relative equal lows, then price is heading for a prioritized liquidity. It might not be today, but I see there's another relative equal high is here. So price might likely take this one out and reject and retrace a bit. So I need to understand this lower time frame, how they work. It's not all about supply and demand and everything. If you can look at this chart very well, can you show me any of your supply and demand that works here? Okay, fine. You want to say this is a supply, this is a demand, or whatever that works and all of that. Yeah, but is that really how the chart is coded? No. Now for that PM reversals, there's something I do wait for double confirmation on my PM. That's what I do. PM is kind of very skeptical, so I wait for double confirmations on my PM. I don't enter at one that first confirmation. It must always be double. If there's no double confirmation, I'm not trading PM. So this reversal happened on the PM session Tuesday trading. After taking out buy side liquidity, what is happening next? What is likely to happen next is what? Reversals. So let's check how that reversal happened. Okay, price took out buy side liquidity, and on the PM I said I was waiting for double confirmation. So here you have, sorry, let me scale my chart very well. Okay, here you have one confirmation breaking a low. That's the simple entry model. You should always know how to identify that. Train your eyes to see that very well. Causing this imbalance, price traded back to that imbalance. I don't want to take that because price might likely take another stops, take another buy side liquidity or engineered liquidity. I want to see price cause the second confirmation, which is this price breaking the second low, then causing another FVG. Then there, only then will I press any button. Only then will I press any button. That's for the PM session. That's how I coded my own psychology to see it as. So price is likely to, it has taken equal highs, likely to run for another equal lows. But for the PM, this is not AM. Yes, the PM, I want to see double confirmation before taking my trades to run for that buy side, or sorry, sell side liquidity. So now for today's trading, what you want to be looking at is okay, price opened here. Now I want to pay attention. I have to pay attention at all possible means for two things. Price have taken out relative equal highs and relative equal lows, right? Potential target is what? Another relative equal highs. Now to pay attention, one is the news. Okay, so here is the news, and you want to be checking out that New York AM session if there's any high drive news, high impact news, or whatever I want to call it. Okay, so we have 3 p.m. no high impact news, but we have 4 p.m. Nigeria time, which is 10 p.m. New York time. So 10 p.m. we have a high impact news, but you know our trade is 9:30. We want to see the fake move happen 9:30, so we should already be you should already see what we want to see before that high impact news. But for you, I will tell you to just observe today's price action until you're good at it. But for me, if it goes according to what I want, then I'll be on a trade. If not, I won't be on a trade, because news are like high volatility. Not that they really disrupt they really disrupt anything. If you are on the wrong side of the market, you say yes, news disrupts your trade. If you are on the right side of the market, you say, oh yes, news is volatility. So I think all of us have different points on how you see high impact news. High impact news causes volatility. If you're on the right side of the market, it goes to your favor. But mostly for high impact news, if it's very high, like the volume is very high, I won't be on a trade. I want to see what happens after the news before I take a trade. All right. I'm talking about me because I'm always here behind my system, watching my trades every time. So you that maybe you don't have the time to sit behind your system and you're not trading full time, so you wouldn't want to be trading the news, right? So for now, my sentiment, my bias, everything is bullish. Anything can happen. We're not perfect, yeah, but I can be called to mistake. I can make mistakes, yes, but my bias for today is bullish. I want to see that high impact news around 9:30, which I'm outlining here. 9:30 equities open, 8:30 New York open, 9:30 we see a fake move, probably to the downside, then we run for buy side liquidity. Then high impact news might likely punch through this buy side liquidity, taking that out. Immediately it takes that out, you shouldn't be on any trade again because it's likely to reverse. Probably take out any liquidity there or reverse in the PM. It might sound confusing, but if you watch this video like thrice, you understand everything I'm saying, and you should not just watch these videos like Netflix. Take your notebook, go to your chart and study. That's how you learn. Trust me, anybody that studies while learning only tends to improve himself. But if you're watching like you're watching Netflix, you're not learning anything. And this implies on any pair at all, any market, stocks, bonds, forex, crypto, and anything. Just understand buy side liquidities and sell side liquidities. Anybody that doesn't understand the market will say the market is against him or her. Everybody wants everything to be in his or her favor. The mind can't fathom failure. That's what we do. The mind is the biggest obstacle. So what you tell yourself you can do is what you'll be able to do. What you tell yourself you can't do, you won't be able to do that. Right? So London session price is not leaving any bunch of relative lows. So I am paying attention of that right now till New York. So at that time at New York, my target is this buy side liquidity up there, that buy side liquidity. I'm at New York. I want to see any short-term low taken out for the fake move, then OT or simple entry module. My entry then will long. But if before New York price drop equal lows or relative equal lows, then boom, bias change. Everything is turning around. Price will likely punch through that before going higher. So I hope you really find this video insightful. Please share, like, and drop a nice comment. And I'll keep dropping for our next video. I think it should be on that PM continuation and reversals. So I hope you understand everything about inducement, liquidities. You should know that the every highs in the market are inducement and liquidities, especially when you're trading lower time frame. I'm not talking about swing traders. Remember, this channel is an intraday teachings. It's for intraday teachings. I am an intraday trader like ICT, so I pay attention to the lower time frame. Mostly they use the daily bias and my 1 hour time frame for potential draw on liquidity, higher time frame draw on liquidity, and all of that. So for this is just one piece of the cake. Trust me, there are more and more to come. And when I'm done dropping all the cake on your table, you'll be very, very thankful. Trust me, that's if you appreciate. If you are not an ingrate, that's if you appreciate things, you'll be very, very thankful. The engagement in the channel have been dropping recently. I kind of noticed that, but no issues. I hope people will come back, and then I think people are already getting frustrated with the teachings and they're seeing it complicated. That's the thing. Many are called, but few are chosen. So many start, but few continues. That's just everything about it. So until next time, be safe.